During the month of May, our Tuesday trend theme has been about oil. Today we're going to continue that theme. We're going to talk to Rob West. Rob West is an equity analyst who's moving towards consultancy because he's really fascinated by the changes in technology and the movement to multiple energy sources that is having such a great impact on the oil market. So it's going to be interesting to talk to him about what's happening in this space, what are the changes, and what's the time frame that we should expect some of these changes to take place. I'm looking forward to meeting Rob, and let's hear what he has to say.
Our industry is going through probably its biggest ever period of change. It's all driven by technology. Technology is coming through and changing everything in energy. And really, those changes are just under-researched. There isn't enough analysis looking at those game-changing technologies and what they mean for the world. So I now run my own firm called Thunderset Energy. What we do is we look at those game-changing technologies and the economic opportunities that they're creating. Our industry is being transformed. We probably have more uncertainty in energy today than ever. And it is killing investment in our sector, killing it. So put yourself in the shoes of the investment community. Last year, the global energy industry spent $1.85 trillion to meet the world's energy needs. And every day, every week, you're being asked to open your wallet to this industry when all around you, you have signs of change. You have people out in the streets protesting, saying this industry shouldn't exist. You have energy transition. That's a catch-all word that people use to refer to this period of change. But actually, we're not having an energy transition. We're having 5 energy transitions all at the same time. Let's go back to those challenges of getting capital into this industry. So there is an obsession right now with buybacks. The number one thing that investors want from big oil is their money back. There's one way to make your stock price go up, and that's to do a bigger buyback. Why? What has to happen to make investors actually prefer reinvestment? And we've measured that. Last year, I started going around asking investors, what hurdle rate would you need? Like, what return would you require where you would genuinely prefer this oil major not to do a bigger buyback, but put more money back into their business? And the results really surprised me. So when it comes to renewables like wind and solar, investors see 10% as good enough. When it comes to gas, people say 13% is kind of what they need as a hurdle rate. Why? Well, because it's the cleanest fossil fuel, so we feel okay about that. Then you get to shale, where people say 15% is the right hurdle rate. And again, you ask why, and the answer is because it's short cycle. Within 10 years, you've got a 3x cash-on-cash return on your investment. And then you get to the scary side of the chart, where you get to offshore projects, these big mega projects that the oil industry is famous for. And the hurdle rate, the required return, is now 20% for investors to want to do those projects. It gets even scarier when you ask about coal. They say, no, we will never fund more coal. And then if you press them, the answer comes out somewhere like 40%. So think about what that means. Think about the analyst's favorite concept, marginal cost, right? So there's all these analysts like me trying to figure out what is the right oil price. And the way we do that is a marginal cost calculation. You say, what does the oil price have to be in order for me to go out and find, develop, produce, and commercialize the marginal barrel of oil in the market? And because it's such a capital-intensive industry, when you take that hurdle rate from 10% to 20%, you take the marginal cost of oil from $40 a barrel to $80 a barrel. So pulling capital away from the energy industry naturally has the risk of decreasing supply. When you decrease supply of a commodity, pretty easy to guess what happens to the price. It goes up. And really, there's this question mark that we could be in for a period of undersupply in the 2020s because of this divestment movement. And actually, that really worries me. Because if you think we need to have an energy transition and it's going to take decades, what is a big spike in the prices going to do to the political will? If oil went to $100 a barrel tomorrow, Would people really want energy transition, or would they want cheap energy again? We need to get that balance right. And that is the hardest challenge for the market right now, is to thread that needle. What are these energy transitions and what do they look like? Well, we've got historical precedent for this, and we can go back and look at these two big energy transitions that have occurred in the past to form a view of what the future is going to look like too. So the first big energy transition is coal. In 1750, the world's energy mix is about 90% burning wood and horses and oxen pulling carts, right? It's not a particularly advanced energy system. And then over this period of 80 years, from 1830 onwards, coal really starts building into the mix. And this is the first great energy transition. It takes 80 years, as I said, and we still burn twice as much wood as coal in the 19th century as this is happening. At the same time, coal creates all these new sources of demand like steamboats and mechanization and railways. That's what the first one looks like. The second one looks eerily similar. So it's oil. Oil starts really building into the mix from about 1910 onwards. Oil peaks as a share of the world's energy mix in 1973. Again, a 60-year transition. And just in the same way, we burned 15% more coal than oil in the 20th century. And oil unlocked these unimaginable new sources of demand that nobody could have seen coming, like plastics and planes and cars. So here we are in 2019, and it looks like we're going to have an energy transition, but actually we're not. We're going to have 5 energy transitions all at the same time. These are happening right now. And I think that analogy of what the past looks like is really applicable here. I think it's also going to take 70 plus years to meaningfully shift the energy system. And I think it's also going to create new sources of demand and opportunities that are just beyond imagination today. And so let's go into that. So what are these 5 great energy transitions? Number 1, renewables. The price of wind and solar has come down by 90% since the 1980s. If you go out and fill your car up with oil today at the pump, you pay 100 cents per kilowatt hour for energy. Okay, wind and solar on average are adding kilowatt hours to the grid at about 5 cents a kilowatt hour. They are the bottom of the cost curve. And they're going to scale up and reshape the entire energy landscape over the next century. Energy transition number 2, shale. So for the first 150 years of oil, we've been getting this resource from conventional reservoirs. These are sandstones and carbonates that are porous and permeable. Now, for the last decade, we haven't been reliant on getting oil out of these reservoir rocks. We're going straight to the source rock where the oil is generated. And this is transformational. There's 10 times more oil in these source rocks than in the reservoirs. And the technology just keeps getting better and better. I recently went back through 300 technical papers in shale. 100 of them are going to improve productivity. On my numbers, shale is going to be capable of reaching 25, 30 million barrels a day. And to a lot of people, that's going to sound crazy, but I can take you through some of that. And these technologies coming through, they're just game changers. Energy transition number 3, electrification. So if you are driving a fossil fuel car today, you get 18% conversion efficiency of the gasoline in the tank to useful energy you can drive with. Make that car an electric car, and you're at 70%. So the solution here is you want to electrify as much of this inefficient combustion process as possible. And again, that is going to go and apply to as many machines as possible over the next few decades. This is why you see oil majors trying to get into the electricity business. This is the future. Energy transition number 4, digital. So it's really easy to think of an oil platform as an oil platform as an oil platform. But the ones being built today from an engineering perspective are light years ahead of the platforms of the past. You go out to the North Sea today to a modern instrumented oil platform, and it has 60,000 tags on 60,000 pieces of equipment relaying data back to shore in real time. If something is about to break, you can see that it's about to break before it breaks and stop it breaking. This is yielding OPEX per barrel of $3 to $4 on these next generation platforms. And it's sweeping through the whole industry. Energy transition number 5, the big kahuna, carbon. The world is putting 35 billion tons of carbon out into the atmosphere every year, and we've got to change that. And the oil companies know we've got to change that. In fact, you could go so far as to say nobody is more interested in driving this energy transition than big oil, because if they don't, they are not going to have a license to operate. And really in the last few years, you've seen companies embrace that message, hook, line, and sinker. These companies know they've got to change and they want to deliver this transition. So let's recap. Here are the 5 themes: renewables, shale, digital, electrification, and environmental. And really all of these just are enormous uncertainties for investors. And that is why, without an understanding of these uncertainties, it is so hard to open your wallet to this industry. And that is the whole point of why I want to do what I'm doing, which is help investors see the opportunities in technology. Because we need to rebuild not the energy system that we have so far, but 3 or 4 more of these things. And we just aren't going to do it unless the capital can go in. So the latest numbers from the IEA, I mentioned the world invested $1.85 trillion in energy last year. We need to increase that by $200, $300 billion per annum by the 2020s in order to meet the world's energy needs. There are opportunities there. Unless investors can see those opportunities, it's not going to happen, and we've got to change that. What does this all mean for oil prices? It's one of the most wonderfully complex questions in the whole world. I always like to think about the oil market as a clock. You can choose, do you focus on the second hand, or the minute hand, or the hour hand? And so maybe let's have a little bit of time on each of those. When I ran my oil supply demand model over the last 10 years, it's one of the most humbling experiences you can have, because you spend your whole life, adding up 100 million barrels a day of supply, barrel by barrel by barrel, and 100 million barrels a day of demand, barrel by barrel by barrel, and then some rebel attack in Libya blows up your model for reasons you could just not possibly have perceived. And that is the day-by-day oil market. It's driven by unknowable changes and remains incredibly humbling to try to predict. Then you get to the minutes. And so I'll give you an example of next year. My oil market balance is over 1 million barrels a day oversupplied. That's scary. That would suggest as shale ramps up and these Permian pipelines become unbottlenecked, we could see some pressure on prices. Then when you look at the hour hand and go back to that question of, are we investing enough in our industry? I see some real risks of price spikes. By the mid-2020s, I can be 2 to 3 million barrels a day undersupplied on the path we're on. And that's coming from one of the most bullish people on shale productivity in the universe. So what does that mean? Well, I'm really worried about it. Do you know the story of prohibition? That doesn't always get brought up in the oil markets, but it's a chapter of history where, for 60 years, the US talks about we need to get off alcohol. Alcohol is one of the big evils of the world. In 1920, they actually do. They ban the sale of alcohol. And there are people writing, we've done it, it's great, the world is now going to be wonderful. And what happens? Nobody can sell alcohol, so the price goes up 7 times. But it turned out that people still wanted to consume alcohol. And so even with a 7x price increase, demand only fell by about 20-30%. And then you got all these unintended consequences, like people going blind from drinking moonshine and the mob. And then you get to 1933, and people think, this experiment wasn't such a good idea. Backtrack, they passed the 18th Amendment, and we now look back at this period of history where alcohol was illegal, and we think, what a weird, weird chapter. Well, if we get energy transition wrong, we could repeat the story in fossil fuels. If we pull back too hard and underinvest in fossil fuels and have big price spikes, we're going to lose the political will to drive this multi-decade change. So, is it really a multi-decade change, right? That's the pushback you always get. Is it really going to take 70, 80 years? And this is where I just think you have to look at the numbers. Around the world today, we consume 60,000 terawatt hours of energy per year. Around the world today, we consume 60,000 terawatt hours of energy per year. If you look at wind and solar, We're investing $400 billion per annum into these new technologies. And each of them, at most, has added 150 terawatt hours per year. So growing at 150 per year, how long is it going to take to move a 60,000 terawatt hour market? And that's why you might come to the conclusion this is going to take decades. You can change this. If we can get better technologies into the industry, then we can really do it. But again, that's reliant on somebody finding opportunities in these technologies. So what are the opportunities for energy investors? Well, I'd like to go back to the analogy of the clock. Let's look at the second hand first. This is going to continue to be driven by who does the biggest buyback. And I think we can all be well aware that that's the biggest force gripping the market today, is that desire for cash return. Now let's look at the minute hand. What you see there is some underperformance in the sector that's really been quite notable because people want to rotate out of this uncertain industry into more attractive spaces like tech and industries with a big future. But now let's look at the hour hand. And this is where you can really do some analysis that shows you the opportunity. And this is the one that I'm most excited about. I've just been through 1,800 patents around the industry. Do you know, it's blown me away how much technology is coming through some of these big oil majors. We think about them as fossil fuel companies, but really at the leading edge of technology in these majors. Wow, the leaders are doing some incredible things. And so let's bring it back to those 5 big themes that we talked about and go through them one by one. Let's start with renewables. I'll give you my favorite example in this sphere. It'd be the area of wind. In the wind industry, there's this well-known principle that if you go higher, the winds are faster. And it's exponential, so it's a cube function of height. But you can't get at these heights with conventional turbines because the towers become too tall. You already have 40% of all the cost is in the foundations and the pylons. So how could you get these wind investments to reach those higher altitude winds? Well, there's a new technology called Airborne Wind, which actually uses kites. And the kites have this really long tether that goes back down to Earth and relay the power back down to a base station. They're really pioneered by Google at a company called Makani that Google invested in. These things are pretty cool. They ride the wind up. They get to about 300 meters and then they nosedive. And as they nosedive, these propellers all along the vehicle start spinning at breakneck speed and they send 600 kilowatts back down the cable to Earth. And then they get to the bottom, they pull up and they make another loop. So you look at the oil majors' patents. ExxonMobil has patented the ability to do big wind farms of these flying wind kites offshore. And the patent humbly says, these systems could power the entire energy needs of the United States 4 times over. And this year, Shale is going to test one of these concepts offshore in the North Sea. It's actually going to fly one. Yet, lo and behold, at the forefront of renewables, behind the scenes, you have oil majors trying to gear up and find these opportunities and invest in them. Disruption number 2, shale. Shale is going to be capable of generating 25, 30 million barrels a day. I know that sounds ludicrously high to some people, but remember, this is a technology industry, not a clunky bricks and mortar capital industry. Of those 300 technical papers in shale I've been through, you know how many use data? 97% of them. You know how many of them use data to build really advanced models or optimize their processes? 60% of them. This is a data industry. And as the digital technologies get better and better, so does the shale production. We have doubled productivity in shale since 2015. And I'll give you 3 examples of things that can improve it coming up. Enhanced oil recovery. We can get 50% recovery factors in the lab. Distributed acoustic sensing. You can now hear every single meter by meter by meter along these shale wells and how to do them better. And algorithms, machine learning to figure out exactly what is the best way to frack that bit of rock. Who's at the forefront of this? There are well-known E&Ps like EOG and Occidental, in the patents and the technical literature, you just think, wow. And on the majors side, ExxonMobil and Chevron have just reconfigured their businesses towards shale. Those numbers keep getting upgraded, and they're going to keep getting upgraded. And that's where they've placed their chips in this transition. Disruption number 3, digital. Having been through 1,800 patents and 400 technical papers, I started trying to score the digital capabilities of every oil major in the market. You go through digital drilling technologies, digital production technologies, digital optimization technologies. And the company that really has impressed me in that sphere is BP. This is driven by the upstream CEO, Bernard Looney, who's really been the visionary behind this. And I could bore you with so many examples, but my favorite one is called Apex. Imagine a complex oil field where you have over 100 wells. And every single day you face the challenge of, well, how hard do you pull on every single one of those wells? And in the past, that was just unknowable. Well, in combination with a tech company in California called Palantir, BP is now monitoring every single one of those wells in real time. It all feeds into an algorithm. The algorithm does a linear optimization and says, turn that one down, turn that one up, turn that one up, turn that one off. And you can get 10+% increase in the production of an asset from doing these optimizations. So these are algorithms coming through and transforming our industry, and this is going to happen more and more and more. And the companies at the forefront of this are going to really reap the benefits, and the companies that aren't doing it are going to be in trouble. Disruption number 4, gas and electrification. So on my numbers, by 2050, if we're going to meet the world's energy needs, gas demand is going to treble. That is the only way I can see to do this without a big increase in the carbon emissions. And as I mentioned earlier, electrification is a game changer for efficiency in the energy sector. So a couple of majors have realized this. And that's why they're reconfiguring their businesses towards gas, LNG, and electricity networks. I put Shell, Total, BP, but really most of these companies are doing this as well, and they're doing more and more of these projects. Again, you can look at the technologies they've been developing, and there are some really interesting advances coming through company by company. When you go to the company investor presentations, they all have speeches, they all have logos, they all have presentations, they all have cash flow targets, and on the surface they can look quite similar. When you start going through their patents and their proprietary technologies, the spread is enormous. I would just put it this way. If you invest in oil with the same technologies as everybody else, you will get the same returns as everybody else. If you invest in oil with twice as good technologies, you'll get twice as good returns. And so if I was going to place my chips on an oil company, I'd be looking at who has that lead, and it is stark when you start contrasting the different firms. Within some of the more niche opportunities, this is where it gets really exciting, particularly if you're more of a private equity or venture capital investor. So I'll give you a couple of ideas in that space that have really excited me. One of them is an area called plastic pyrolysis. So around the world today, we can only recycle 15% of the plastic. Very, very pure PET or high-density polyethylene. And the other 85% of the plastics either go into landfill or they get incinerated, or worst of all, 9 million tons a year of them end up in the oceans. There are companies now that have cracked how you can take those mixed plastics and turn them back into oil. So instead of being a waste product, this is now a way to create economic value. And you model the economics of these things. I could go to a waste management facility in anywhere in the UK. There's 500 of these sites in Europe. You could put in a small pyrolysis plant and you can make a 30% return, turning plastic back into oil. And in the process, you could take out 15 million barrels a day of oil demand by the 2040s. And you can help solve this enormous challenge that the world faces. And so I've been through 20 companies, all the patents, all of their different technologies, and wow, there are opportunities there. So that's the sort of area where I like doing the work, is to try and find opportunities from energy disruption and help decision makers get behind them. I'm going to do something now that is going to get me into trouble. And just to try and be helpful, I'm going to say who I think the leaders are around some of these big themes. And this isn't to discredit the people that I don't say. Everybody has some technology somewhere where you think, wow. But who are the leaders? In shale technology, I've really been impressed by EOG, Occidental, and increasingly Exxon and Chevron. In digital technologies, I've really been impressed by BP. In energy transition technologies, I've really been impressed by Shell, Total, Eni. And in offshore technologies, I've really been impressed by Total, Equinor, and Chevron. There's one that I haven't mentioned who's just impressed me across the board. And it's topical because I believe they have some kind of world's largest IPO coming up. But when you go through the technical literature, wow, Aramco stands out as an amazing company, just from a technical perspective. That's the one where you read through all their patents and you think, huh, I had no idea somebody was doing that. So that's just a handful, and there's a lot more that we could run through, but those are the ones that resonate with me. So how would you invest in the sector on a day-to-day basis? I think you've got a couple of options. The first one, if you're going to have this volatility in the price, is you've got to be prepared to ride out volatility. And I think the biggest opportunities are for taking a long-term view and being willing to ride out that volatility when other people aren't. In investing, you get paid to be courageous. And you do the numbers. The world is going to need energy. The world is particularly going to need the best energy it can get. And if you invest in the companies that give you the best energy you can get, then when push comes to shove and the volatility plays out, I think you're going to come out on top. When it comes to the more trading-oriented strategies, there are some pair opportunities that you can use to de-risk the volatility in the oil price. So find a technology leader and pair it with less of a technology leader on the short side. And so those are the things that I'd be looking at if I was investing in the equities in this sector on a day-to-day basis. So let's bring it all together. There's $6 trillion of capital that is disinvested from fossil fuels right now. And I think that's the wrong answer. I think that's going to leave a lot of value on the table. And I think there's a way we can do so much better, which is identifying the best energy technologies, identifying the opportunities that they create, and getting behind them. Because if you can drive capital where it's needed in this industry, we can finance better energy for the whole world. I'd like to give you an example of that can have some personal resonance with me. Growing up in southwest London in the early 1990s, my first ever word was tontor. What is tontor? It was a 2-year-old trying to say the word Concorde. Why do I think that matters? Well, we started in the 18th century. Let's go back to the 18th century. Captain Cook sails to Australia. It takes 2 years. By the turn of the 20th century, on a steamship, that journey is down to a couple of months. Then in 1933, this new company comes along called Queensland and Northern Territories Aerial Services. Today we know them as Qantas. And they launched this service called the Flying Boat. And the Flying Boat goes from Sydney to London, and it makes about 30 stops along the way, and it takes that journey down to about 10 days. So 2 years, a couple of months, 10 days. And another 40 years later, you get the Boeing 747. That journey now takes 1 day. And then you fast forward to the time I talked about when I was a kid, and we had supersonic travel. We had the ability to go 4 or 5 times faster again. And we've lost that. And that's a really strange thing when you think about this arc of human progress and human mobility, that after centuries of improving, we start going backwards. There's other great data you can get from the UK Department of Transportation, where they quantify the speed at which people travel around the UK going back to the 1970s. Between 1970 and 2000, it basically doubles. And since 2000, it's got 7% slower to get anywhere. So as we're talking about this big theme of energy transition, I think it's really sad if we deliver an energy transition at the cost of all losing our mobility and losing the just life-changing, prosperity-enhancing effects of the energy system. And what I think would be a wonderful thing for the world is if we can do both. Can we shift the energy system to become cleaner and more efficient, and also unlock better energy technologies for people? Because that's the opportunity our sector has to make its mark on the world. And I think for an investor, being part of that journey can be incredibly exciting, and I think can also pay rewards.
Rob is the second person that we've had who's talked about oil in the context of this much wider space and the importance of these technological changes that are taking place. He was talking about the capital needs of the energy sector to prevent some dramatic oil price spikes in the future, and the importance of the large cap companies. Many of these are the ones that people often think are dullards, but he thinks that these are very much at the epicenter of what is going on and the changes that are taking place across the whole energy spectrum itself. We've got one more day still to go next Tuesday, where we'll hear another perspective within the oil and the energy space. And I hope you'll tune in for that one as well. Thank you.